Alright guys, let's dig into the specifics of a couple of short trades I made recently. Okay, I'm gonna go ahead here and share with you how I tackled these entries using a method that in my opinion encapsulates the essentials of a solid scalping strategy. Basically, this backtested technique is all about grabbing gains in a flash. So let's start with my initial trade and review the 10-minute ES chart. Right off the bat, we are seeing the price lifting a cool 20 points before it pulls back, takes a breather down here, then resumes its measured power climb north of the 50.27 level. After that, the market decides to hit the pause button, causing some sideways movement and creating the right setup for a double top formation. As you can see from the price action, we have the rise in price followed by a 15-point correction and then a noisy second rise to the same approximate level as the first, followed by another correction, forming what you could argue is Wall Street's version of a cliffhanger. Now, this indicated to me that not only is this bearish reversal pattern valid, but it also confirmed that the market was reacting as expected after shifting upward here and then printing inside this 2-minute imbalance value area, which is obviously a structural element that is frequently seen before a repricing stage. And what that means is that after the price kept breaching this 1-hour imbalance zone, it signaled that it might be ready for a decline, especially since it failed to break through this resistance level that clearly aligns with the base of the 2-minute imbalance zone. Recognizing this confluence of factors, I saw an opportunity here to enter the market short. Now, a fair argument could be made why I chose to enter at the mid 27 level instead of below the 26 level. Hindsight tells us that the latter would have been a better entry, probably a 10-point gainer, if the trade had gone my way. However, let me briefly explain to you the reasons behind my decision. First and foremost, the price action, as you can see from the chart, was far from clean at that moment. Take a second here to observe the stage of choppiness at this area before the price, despite these higher lows, before the price launches into this big supply bar. Also, and this is really important in my opinion, after a prolonged sideways move, like a whole 30 minutes, the price didn't manage to print inside the 2-minute imbalance zone. In other words, there wasn't any solid confirmation for an entry here, like in the mid 27 level, where the price movement was much clearer after the reversal and obviously easier to read. The reason behind my argument is based on the fact that we have a classic bearish manipulation pattern going on here. You see the formation of this lower high that surpasses a marginal high is influenced by the prominence of these green candles that shape the structure of this entire mini range. So theoretically, the surpassing of the marginal high should signify increasing demand. However, there is a catch. More often than not, this rising demand turns into overhead supply or resistance if an imbalance zone is present. This concept ties into my belief that price action encapsulates all available information, provided you can connect the dots. From a purely theoretical standpoint, identifying high probability trades without employing filters or confirmation would be virtually impossible. This is because the market is like a complex puzzle with a web of information that includes the dynamics I discussed earlier. And based on this logic, it's important to understand these intricacies and how they can impact future price movement. And like I mentioned earlier, guys, even though the 50.26 might have been a more profitable entry, it would have been more like gambling rather than trading, and that's not gonna obviously work if you want to survive in this game. Anyways, after I got my short filled, I covered at this support level. The ideal cover clearly would have been around the 50.12 area, but I just didn't want to risk it. Okay, and now that we have concluded this trade, let's take a look at my second entry. From a technical standpoint, the market appeared ready for a pullback after reaching an all-time high. However, as the price reversed off of this top here, it started to head lower. This suggested that the markdown phase was underway. Now, in the context of Wyckoff's theory, the markdown phase is one of the 4 stages of the market cycle that clearly also includes accumulation, markup, and distribution. Obviously, the markdown phase occurs after the distribution phase and is marked by a decline in prices. And sure enough, after this break, the market confirmed its shift with a significant 40-point sell-off that happened during pre-market hours, indicating a strong reaction to the earlier distribution stage. Also, after this retracement to the upside, as the price began to lose momentum and break structure down here, it clearly signaled the end of this specific market phase with a rebound from the mid-20s. We also had the price basing for like an hour in a consolidation mode here. This is typically seen after a dramatic price drop and usually signifies accumulation. So as the price began to climb, it started showing good relative strength, suggesting it was primed for the next leg higher to test these highs. Once these highs were surpassed, the market's upward momentum was halted as the price nearly filled the remaining portion of this large imbalance zone. In hindsight, the best entry point would have been just below the 50s with a stop loss at the 50 level. This observation is based on the price's tendency to print near the top of the imbalance zone. At the same time, the break of the 46 level, which obviously aligns with my entry point, pushed the market downwards towards my profit target. So I would say this was a good trade, but certainly not a perfect one. And it's not about being greedy or anything like that. After all, I extracted 10 points from this entry. The focus is on risk mitigation. The greater the precision in your entries, the lower the associated risk. And when it comes to accuracy in entries, the following video exemplifies, in my view, this concept. Alright gang, this should do it for today. Again, thanks for watching, and as always, hope to catch you all in the next one.